Welcome, guys. We're here with the founders of the Louisiana Impact Fund. Is do a quick review of why they started it, where it is, and their vision where it's going. The good news is they recently launched the Louisiana Impact Fund, their first round of funding, and they're at the starting line, ready to go. So do you mind maybe going around introducing yourselves and how you got here?
Yeah, definitely. Thanks, Tim. Thanks for hosting us. I'm Jared Quoyeser here. I'm born and raised Louisiana. I've spent almost 2 decades away, 23-year Intel veteran, 2 years Qualcomm, all focused on building organizations, startup entities within the Intel construct from our healthcare division, vertical segments, and managing all indirect revenue for North America. Since been back in Louisiana, I'm investment committee chair for Healthcare Innovation Fund 1 and 2, based out of Lafayette, Louisiana, and on the board of Ochsner Health.
Awesome. All right,
Yeah,
Josh?
Yeah, Josh Cummings. We get kind of a 2-for-1 for Joe and I because we've worked together for 20 years, so it makes the resume a little easier. I've spent 30 years in investment banking here in New Orleans. Joe and I bring the corporate finance discipline to the side of the fund. What we've done for the last 30 years is really scaled and built companies, primarily through the formation of public capital and strategic advisory. Early in our careers, that was in and around the Gulf Coast. It was somewhat industry agnostic. We were so successful, frankly, that we woke up one day and a lot of the companies we had helped scale had found themselves acquired, re-domiciled, and headquartered in another location. There weren't many companies that were public of that size and scale left in the Gulf Coast, which is a common thread that we'll talk about with Louisiana Impact Fund, albeit in the lower middle market. We really transitioned to energy, and what Joe and I have been good at, what the firm has been good at, Johnson Rice, has been identifying changes in total addressable market, how companies can take advantage of those changes in the total addressable market and really grow. And we've been hands-on at the strategic formation with principals, with owners. We've helped select C-suites, we've helped devise strategies, and then ultimately implemented and supported those companies with public capital formation and strategic M&A. So we bring that discipline to the fund, its valuation, its due diligence, its structuring. I mean, it's all the things that Jared doesn't bring, which is really the more fun part of the equation, which is that company scaling and operational expertise and best practices. So together, we think it's an ideal set of talents for lower middle market private equity.
Awesome.
Joe Seremet, yes, part of the co-founder group. As Josh said, I've been lucky enough to work with him for 20 years. I graduated from Tulane in 2005 and always knew I wanted to be in finance. About 2 years ago, I met Jared and we hatched this plan, and it's become a great passion project for us. Louisiana Impact Fund was born with the idea that why is Louisiana losing population? So we did a ton of research on that. And what really came up with this thesis, because the M&A market in the state is very destructive. For instance, last year there were about 53 transactions done in the state of Louisiana. Only 2 were done by in-state counterparties. The other deals were done by either out-of-state strategics or out-of-state private equity. Half of those deals were done by out-of-state private equity. So we said to ourselves, can we form a private equity fund that stops that, or at least nudges the battleship the right direction, puts up some public wins? Because when private equity, outside private equity or outside strategics buy businesses, they typically buy them for their customer lists. They fire the employees, they move those businesses headquarters. Louisiana does a lot of work and gets very little of the benefit. And so we set out to stand something up that partners with the largest institutions, the largest family offices, people who are influential in the state, to form this ecosystem to buy businesses and invest in businesses to keep them here and keep the economic might here. And so that's what we set out to do, and we're really excited to get to that starting line.
So tell us the announcement. What was the announcement that came out this week?
The announcement was the 13th.
Yep.
The announcement was the first close of the fund. So we actually got to stand something up finally. And really what that means is we're getting to the starting line. So our intention is to, obviously we've been looking for deals for a long time. We continue to canvass the marketplace for transactions. But over the next 18 months, we plan to continue to raise capital.
The good news is you're live.
But we're live.
Congratulations.
Money to invest.
Yes.
As a startup, you guys have launched, right?
We have launched.
Being an entrepreneur stinks, doesn't it?
It's awesome.
It's awesome. So let me ask, we all talked about this for a while, but what you're doing is certainly good for the state, keeping businesses here. I mean, the idea of we need to keep the businesses here, grow population, that sounds great. It's also, you're here to make money. Help me understand, is this a great civic thing, or is this a great opportunity for investors to make money?
I think it's symbiotic, but make no mistake. I mean, we are here to generate the best risk returns for LPs that we possibly can, first and foremost. That's what we do as fiduciaries, that's what we do as fund managers, and that's the most important thing to us at the end of the day. But because of the ecosystem we've created, the network we've created, we will have more opportunity from a deal flow perspective within the state of Louisiana, and then the ability to support these companies within the state of Louisiana. That combination is what creates a symbiotic relationship where we're going to generate the best risk returns by doing that, and that enhances value within Louisiana. So the idea is, let's scale these companies not into what they are today, but what they're going to be in 3, 5, 7 years when we exit. And they're going to be so significant and so substantial that if there is an exit to an outside party, the likelihood of that entity continuing to have deep roots in the state is much higher than it is now. Today, as Joe mentioned, it's easy to come in, bolt onto an existing portfolio company if you're out-of-state private equity, and buy these businesses for their customer list. They don't have the roots and the depth and the maturity that they will hopefully after our investment cycle. What we want to make these things, if we were to sell to out-of-state private equity to generate the best risk return, is they see it as a seminal portfolio company, not a bolt-on. If there's a strategic, the base of operation is so significant that it's likely to continue its trajectory and its footprint within the state of Louisiana. So we think we can do that, balance the two. But again, it's symbiotic between the opportunity in Louisiana and the building of businesses because of the network we've created in the fund.
This is a free market solution to a statewide problem.
Yep.
Yep.
And also, if you take that one step further, Josh is right. We're going to build these businesses where they put down roots and extend that runway here in the state. But we are here to generate returns. And so if an outside entity comes in and buys one of our portfolio companies, that could happen. But guess where that wealth's going to go? To our LP network, which is where? In Louisiana. So that wealth still stays here. So we can churn that wealth. We can compound those returns. And that's an important distinction.
So help me, an ecosystem is a network of a bunch of different resources.
Yeah.
Louisiana's building a capital stack. It always starts out with grandma, can you give me my Christmas money early? So that's the friends and family money. Help explain the capital stack from money for entrepreneurs and where you guys are fitting in the stack.
Yeah.
Well, how about this? So let's kind of hit upon kind of historical, maybe let's go back 10 to 15 years. And Tim, you're a good kind of purview of this, a witness of this. Louisiana did not have a great angel and VC ecosystem 10 to 15 years ago.
Or 25.
Over the past, let's say 20 years, there has been focus, there has been commitment, there has been capital commitment.
And what's an angel?
What are you describing as an angel? What are you describing?
As an entrepreneur. An angel is somebody who is what?
Hey, I got an idea.
So they're writing checks.
You know,
you're in the
angel
bars.
investor,
Yeah.
Hey, I'm going to write a check for him as part of it. Let's go see what you can do.
So that's after grandma.
Angels,
Then what comes next?
venture.
Depends how rich your grandma is.
Yeah, because it could be venture too.
So after angel, and
Yeah.
that's like the Gulf Coast Angel Network.
Yep.
After angels, we call what?
Venture.
Who's an example of a venture company here?
Boot 64, you got Health Innovation Fund 1 and 2. Those are all venture funds.
So those are venture funds. Angels give me 100 to 500,000, maybe. Venture gives me 500 to $1 million or $2 million. Okay, then what?
And might pool to do where
larger
each
round.
one is going to write $750,000 check.
The SSBDCI is the venture.
Absolutely.
Theoretically, that's
Yeah.
what
It doesn't necessarily have to be venture, but it's limited in size
Yep.
per investment. Lee wants to fund growth, not buyout. It can straddle both venture and then lower middle market private equity, but tends to be a little earlier stage
Okay.
than lower middle market.
And after venture comes what?
Lower middle market private equity.
And that's what you guys do.
Right.
who we are.
That's
And the
what we are.
good distinction to use is angel grandma, an idea in a PowerPoint presentation. Venture, a little bit of revenue. Later stage venture, a lot more revenue.
Yep.
Middle market private equity, EBITDA. And so we're looking at businesses that are generating EBITDA, established businesses, $1 to $8 million of EBITDA.
And what's above you?
That would be like larger private equity.
An example of that is
Strategics.
It really becomes the size and scale of the company, right? So we're writing checks anywhere from, let's call it 3 to, at final close, 25 million, albeit it would take a really unique investment for us to write a $25 million check and a $100 million fund. That's $1 to $8 million of EBITDA typically. We have LPs that will co-invest with us so
Yep.
we can scale up. The next phase of private equity is going to be for that next stage of company that's $5 to $50 million of EBITDA, right? They have funds that are anywhere from 500 million to a couple billion. They're going to make 5 to 8 investments per portfolio, so you can do the average check size. And then it just keeps moving up until you start accessing the public markets.
Yep.
So it's just
Who else is in that space in the state?
No one who just focuses on the state of Louisiana.
So this is a spot that's open.
Yes, for Louisiana businesses. There are other private equity groups in the state who do make Louisiana investments, but their aperture is much wider from a geographic perspective.
Yep. Okay. As you know, over this 25 years, you're building this ecosystem, and it's sort of like growing a school from the kindergarten all the way up. We're just now adding the high school or the college. So we're now growing up. So you guys have been running around the state for over 2 years with this vision and this idea. Tell me what you learned about our state, of the innovation and economy of the state, and the acceptance of.
And Tim, going back, when you look at the capital stack, so the state of Louisiana and with its entities, with SSBCI and other funds, now we're seeing a point of momentum of actually really material capital going into that ecosystem. And Joe said, we're starting to see those types of organizations, those business models, those companies be de-risked and become EBITDA positive. And that's where we become excited about the opportunity to work with them. So it's great to see that as an overall perspective and momentum and trajectory across the state. I would say one of the biggest things that we have seen over this past 12 to 24 months is a conviction from Louisiana-based founders and Louisiana-based families that own companies that want to do business with Louisiana organized capital, either on the growth side or the buyout side perspective, because they're looking at, hey, where can I grow in place? Where can I grow my company in? And guess what? You guys are Louisiana-based organized capital. We want to work with you. I am looking at the transition and the succession of our business, and I would rather work with a group that's based in Louisiana that's going to look out to be able to keep the business entity, the employees within the state of Louisiana. We underestimated the conviction of that, and it has exceeded our expectations.
No, I think the nuance there is, and let's be careful, we're not just investing in new startup growing entities. A lot of the deal flow we've looked at, a lot of the deal flow we're currently prosecuting are businesses that have been around for 25, 50 years.
Absolutely.
I mean, they're extremely mature businesses who've been approached by out-of-state private equity and didn't like the alignment and the partnership for whatever reason. And some of that, I think, is what can we do with this business in Atlanta? How do we grow this business outside the challenges of the state of Louisiana? We can, as we've said, bolt you onto an existing portfolio company and look what we can do. And founders care about their businesses. They care about their employees who help them build them, and they want to see continuity. So without somebody who's focused on investing in the state of Louisiana that has the kind of network we do that can benefit the portfolio company, then most of what you hear from out-of-state private equity is, let's figure out a way to get you less Louisiana-centric. We all know the challenges of Louisiana, right? And out-of-state private equity is very acutely aware of that. So those mature businesses, I think, one, are getting older. They're looking for succession issues. Sometimes the sons and daughters don't want to take over. A lot of times when we start talking to founders, they're thinking about exit, but they're really passionate about growth. And we talk about aligning growth capital. They get really invigorated and say, maybe I got 5 or 6 years left. So I don't want there to be confusion. It's not just new businesses. It's a lot of established businesses. And the receptivity of that's been really strong, as Jared kind of suggested.
Yeah, and it's great to see that the startup ecosystem is just sort of progressively people growing up.
Yeah.
If there were a room full of entrepreneurs, give me the pitch of who are you talking to? What are the exact type of companies that would be perfect for the Louisiana Impact Fund? If you could clearly articulate that.
Yeah, sure. It would be companies that have been in business for a while, have a track record, have a first-class management team that's done it before. It would be a company that's generating EBITDA, that's established that the business idea has been de-risked.
What is EBITDA and why is that important to you?
Essentially, it's a proxy for cash flow.
Cash flow.
You got money and you're making money.
Yep.
And now you've proven the concept, right? And so now the flame is starting to grow in your business. Yep. And we're here to throw gasoline on an existing flame, not start the fire.
Yep.
That's the answer.
But Tim, I think you were looking at, say, kind of what segments we're looking at, or where we are looking at Louisiana-centric businesses. So that's our filter.
Do I need to be from Louisiana, or what's the commitment of the founder or the management team?
I can be a lot of different things. So yes, the business should be domiciled here or have tangentially related to the state. So like when I say that, I mean there's opportunities in the Gulf South for us to re-domicile businesses here eventually. I think Fund 1, our focus is to keep existing businesses here because of the M&A market dynamics that I talked about and grow those businesses in place. When we talk about our future longer goals, larger funds, compounded returns, we think about how can we bring and re-domicile businesses here? And that's a good point because it brings up our relationship with LED. It's not a formalized relationship, but they've been extremely helpful for us. They promote our idea. We have the same goals. And in many instances, they'll be able to help us with certain incentives to do that. There'll be incentives to bring businesses back here. And if we can demonstrate that we're going to keep a business here that was going to leave, they'll be able to help us as well.
Yep.
And so that's a really important distinction. And then to Jared's point, how are we different? The world doesn't really need another generalist middle market private equity fund. And so we're completely different. And we get the question all the time from, I would say, larger sort of institutional investors or family offices, which is, what's your focus area? And Jared said it. Our focus area is Louisiana and taking what Louisiana can give us. And the only reason we can have such a broad sort of strategy is because of our competitive advantage of our LP network. We specifically and strategically selected our LP network because they can help our portfolio companies. It's getting a whole bunch of people who think the same way about helping a state move it in the right direction, whether that be for deal access, political access, contract coverage. So we want to make sure that we win. And how do we make sure that we win? It's our strategic alignment with our LP base. And that is a very different strategy than a lower middle market private equity fund who's going out and getting pension dollars, right? Okay. Pension dollars wants to give you $1 and get 3 back. Ours want to give us $1, get 3 back, and also help us get that 3 back.
So back to the LP network, go deeper in that. So what you're saying is a competitive advantage for Louisiana companies is the LPs or your investors.
Correct.
So tell me, whom are these people in general, not names, but in general,
think of the largest sort of institutions, family offices that have a symbiotic relationship with the state or have meaningful influence and ties here, who want to stay here. And in fact, in many instances, their very existence as a business relies on our population.
Yeah.
Right?
Okay.
Completely aligned from an incentive perspective.
If you look at our LP commitments, they absolutely saw the market need for what Louisiana Impact Fund is going to be delivering into the market. Growth capital, buyout capital. They see in it, and they see it kind of in their own business. They see it kind of with their ventures, those types of things. And they were super excited in regards to, let's get this stood up and let's move this forward quickly, because there is an absolute need for it in the market.
Yeah, because of what really resonated with people, and I don't think no one's really aggregated this data. We all know that there are businesses being bought by out-of-state interest and being moved out. We all implicitly know that. But when we put numbers around it, that was really powerful for people. Only 2 in-state buyers out of 53 last year. And we looked at 10 years of data. And over the last 3 years, it's 96% out-of-state interest.
So I know the good deals, whom's investing matters. So I guess as a Louisiana entrepreneur or a business leader, you're saying there's a competitive advantage by now having a network of these LPs.
Yes.
Had this group ever been assembled? Had they all ever invested?
Yeah.
Has this band ever been created for local businesses?
I'm going to say that this in the most loving way, but Louisiana has a lot of different, call it fiefdoms, right?
Crew.
We have North Louisiana. We have Central Louisiana. Yeah. We have the Lafayette region, Acadiana. We have New Orleans, right? We have the North Shore. And they've all been fighting over limited resources. And so it's always like me versus you. And so when we set out to do this, we're like, we want to put pins all over this Louisiana map to bring all these people together. So what we get so excited about is our annual meeting, right?
Yeah.
When we have someone from North Louisiana, Baton Rouge, New Orleans, let's actually work together as a state. And I think that's a very new concept.
It's a big idea.
To pull together. It's a big idea, and one that I get accused of being a dreamer about, because I think a lot of people have said this before, we should all work together because we all want the best for the state. But that's what we really tried to set out to do when we put those pins on that map. And we did it. Like, one of our biggest investors is from North Louisiana. One of our biggest investors is from the Lake Charles area. One of our biggest investors is from Baton Rouge. And so we did that. And I think that's going to kind of accelerate over time. And as we grow and expand that network, it gets more powerful.
Yeah. And Tim also, too, is a funny story is that when we're up in North Louisiana, they initially asked us if we were lost, because no one comes up to Interstate 49 to Shreveport and Monroe and Ruston. Yeah. but we're going to be there. We're going to be present there. We're going to be the capital partner up in North Louisiana. Like Joe said, this is a holistic state of Louisiana.
So no one's ever done this had this pitch to assemble local investors for a local.
Not in the lower middle market equity space.
No, and we tried to look for analogs in other states. Has anyone ever tried to do a sort of a private equity fund that is fighting for patriotic competitive advantage, I'll say? And we really couldn't find one. But it takes a certain population, right? Louisiana is a special breed of people who really do love their state. They love all the special things about our state. You mentioned rituals all the time, right?
Yeah.
And rhythms to life. And I think that's a really cool and unique thing about Louisiana. And we all love it. And we love it enough to live here and raise our kids here, right?
Yep.
So why not protect it from an economics perspective?
Well, inherently, most private equity doesn't need it. They do it through operating partners. They take very skilled people who are industry knowledgeable, have track record, and that operating partner helps create deal flow. It helps understand what the underwriting tenets are, what you're funding from a growth perspective. Our LPs are our operating partners for all intents and purposes, and hopefully operating partners with a greater vested interest, not only in the fund, with what we can do together in the state.
That state pride is important.
Does this carry beyond expats born in Louisiana but don't live here? Do you see that as a
Yes.
part of your LP network?
Absolutely.
If you were pitching a Louisiana person who's living in New York, why should I invest in this fund?
Because they understand it. In the conversations that we have had with LPs and potential LPs in regards to these guys are domiciled, let's say outside of the state of Louisiana, sometimes like they want to get back to the state of Louisiana, like to understand it. How can I be influential? How can I provide an impact, quote unquote, an impact to the economic foundation and pillars of the state of Louisiana? This gives them an option. Because Tim, think about it, is that when you look at the state of Louisiana and economic foundation, there isn't an Intel that has a campus here that has 100,000 employees. There isn't an HP that has 100,000 employees. What it has is a bunch of scrappy entrepreneurs that have built companies to 20, 40, 80, whatever up the stack on revenue side. And they built those companies. They started it at the kitchen table and built it.
Yeah.
And they've seen that firsthand. And they have been part of families that have built that, but they decided to move away and they see the opportunity and they want to figure out how can I give back personally and how can I give back, how can I be involved on the business side too?
I'll give you a couple examples. So there's one of our kind of partners in all this thing is a private equity guy out of Houston, and he manages several $1 billion. For free, he gives me advice whenever I want it. I can call him whenever because he's from Louisiana, he's an expat, and all he wants to do is help us. And it's been extremely valuable. Another example on the other side of the coin, which is we haven't talked about, which is like employment opportunities in the state and leadership in the state. When we did that announcement, I got 3 separate LinkedIns from 3 guys who are from Louisiana. One was at Darden, one was at Wharton, one was at Harvard, all finishing their MBAs. And it was like, we love what you're doing. We want to move back. And so we kind of put up the bat signal for finance people, and it started to show. And so we think that there's going to be a tremendous ability to move people here and also grow that and cultivate that.
Look, I think the greatest asset of Louisiana are Louisianians who moved away. Learning New York and Boston, San Francisco, but if you guys can bring them back home,
Yes.
Not only you're helping new ventures, but you're also bringing new capital into the market.
Completely agree.
What do you want people to know? If someone's listening to this, they read the article you launched, what do you want people to know, or what do we miss, or what's critical that information is important?
Can I answer it 3 ways?
Or you just have,
How about this from the entrepreneur who is, their business model has been de-risked and they're ready for growth. Louisiana Impact Fund is that organized Louisiana capital so that they can grow within the state of Louisiana. For family businesses or founders who are looking at their succession plan, Louisiana Impact Fund is their solution. And we are looking at how do we cultivate the next generation of business leaders within the state of Louisiana, either from repatriating and then bringing them back out of state to Louisiana. They could be part of our Portco operating team and running companies type of thing. We want to be able to cultivate that as part of this.
Awesome.
Yeah.
I would just say to sum it all up, we're open for business. We're ready to make a difference in the state. And we want as many partners as we can who share our vision and our goal going forward. And we need to expand that network is what's going to make this fund succeed and be powerful.
Yeah, I mean, as Joe said, just to give you some specifics around it, I mean, we've done our first close. We'll do a second close somewhere between 4 and 6 months from now, and then we'll do a final close within 18 months of the first close. So for those LPs who are interested in our view, our vision, our competitive advantage, we're looking to add to that LP network. We want to do it strategically. We want to do it with a capital base that allows us to scale. For those businesses that are looking for capital, whether it's for growth or succession, and oftentimes I think it's a combination of both, we're open for business, Joe said.
Well, Josh, Joe, and Jared, I guess the three J's. I know that we got
Three J's.
Yes.
the three J's.
That's what we should have called the fund.
The
Evidence
three
of
J
our
fund.
mission statement.
It's like a ranch when you do 3 days.
Well, first, thank you for this effort. I know it hasn't been easy to start. It's not easy, so you guys have really worked hard. Secondarily, filling a gap in the ecosystem is critical to the partnership. But thirdly is building this new network of investors. How can people get in touch with you? What's the best way to reach out, whether I'm an entrepreneur, an investor, an expat, or someone that's worked at?
Info@louisianaimpact.com.
All right, guys, thank you.